please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With the union budget just round the corner, we continue to focus on the expectations that India Inc. has from Finance Minister Jaitley. Over the last 1 month, EY India surveyed 150 CFOs, tax heads and senior finance professionals to get their wish list for Budget 2018. What are the industry-specific demands? Here are the top 10 findings. Right at the top, corporate tax. 48% of those who were polled said that they expect the rate to be brought down to 25%, but said the surcharge levied on businesses with higher total incomes may continue. So at this point in time, status quo 33% on whether the finance minister will lower the corporate tax rate to 25% and continue with the surcharge. Number two, 40% of the respondents who we polled did not expect the minimum alternate tax or the MAT on incentives to be replaced by the lower alternate minimum tax. So that pretty much tells you that corporate India isn't going into the budget with high expectations as far as MAT is concerned. However, they did see a cut in the current MAT rate. That's the hope. Number three, tax laws. More than 3/4 of the respondents said that they expect the tax laws to get more teeth, with the government announcing more anti-avoidance provisions, particularly when it comes to transfer pricing. So this is in continuation with what we've seen happening even as far as the BEPS norms are concerned. Number four, e-commerce taxation. 2/3 of those surveyed feel that the government will expand the equalization levy, which is a tax on digital revenues, to online sales of goods and services. Now, remember, this has been something that startups have been requesting against, but this is the expectation that our poll is throwing up. Next up, this is what concerns you and me. Income tax. Close to 70% are hopeful of a revision in the threshold limits for personal income tax. So that's a significant majority that believes there will be changes. Long-term capital gains, the bogey is back. Nearly 50% expect the government to make no changes in the current structure. That is, no tax on gains from equity investments held for more than 1 year. Will this be the budget that changes the status quo? We don't know. As far as the broader economic focus is concerned, over 50% of the respondents expect a substantial increase in the NREGA allocation, that is the Minimum Rural Employment Guarantee Scheme. Now, this is in line with the broad expectation that the budget will have a rural focus. Number 8, 39% respondents think the government will relax the fiscal deficit target, but will try and keep it at 3.2%. But remember, the target for next year is 3%, so the slippage, if at all, is expected to be a minor one. Number 9, more than 60% of the respondents expect a substantial increase in the allocation to support manufacturing, construction and infrastructure. The question is, does the finance minister have the elbow room? And at the end, the respondents do not expect the government to announce a basic minimum income program. That is the expectation that India Inc. has from Finance Minister Arun Jaitley's Budget 2018. We're calling it the election budget here on CNBC TV18. Joining me now on the show today to discuss the findings, Pratibha Advani, the CFO of Tata Communications. Also with us, Amit Kumar Garg, the CFO of NIIT Technologies, and Sudhir Kapadia, National Tax Leader at EY India. Mr. Kapadia, let me start by asking you, sir, and let's start by talking about corporate tax. The survey very clearly suggests that whether the finance minister is going to bring down the corporate tax rate to 25%, along with the surcharge continuing, status quo is what 33% expect. They do believe the finance minister may lower the tax, but the surcharge will continue. That's about 48%. Which camp do you belong to, sir?
Well, I would say the government has done a good job of managing expectations, this year nobody is expecting a complete reduction in the rate. I think just 2 points there, Shireen. One is that government's own statistics indicate that the effective corporate tax rate actually is trending below 25% for some time now, for various reasons. So really speaking, if we were to do the math, or if government were to do the math, I'm not sure they will really lose too much revenue. Now, in my experience, talking to various corporates across the country, most of them, if not all, would prefer a simpler, lower rate and, phasing out of deductions, exemptions, much more than a complicated system with a higher rate. And we have seen countries like US, of course, being the latest, go down that path. So there's a lot going for it, and I don't think the revenue loss will be that substantial.
You don't believe the revenue loss will be that substantial? Pratibha, which camp do you belong to? Status quo, or do you think that we are going to see, in light of what's happening in the US, etc., a move on the headline corporate tax rate?
I would like to see a reduction in the corporate tax rate. Having said that, while Sudhir mentioned that the effective tax rate is 25%, but if you actually see, India has one of the highest incidence of tax. If you look at the corporate tax and the dividend tax together, they are one of the steepest. Given what's happening globally with US and UK leading the way, I think it would be only appropriate for India to follow suit.
Are we likely to lose out on our competitive advantage if we don't see a reduction?
Short term, maybe no, but long term, yes, because corporates will move to geographies where they would find efficient tax structures.
Okay. Sudhir Kapadia, you know, we talked about dividends. Pratibha just brought that up. And again, this is something that we've been polling in our surveys for the last few years. Will the finance minister lower the dividend distribution tax and shift to a classical system of taxing dividends with shareholders? Majority, 65%, believe that it's going to be a status quo. So again, they've managed expectations very well. Do you expect any move, at least as far as the DDT is concerned, sir?
You know, I think I agree with you. Obviously, the survey results are before us. Most people don't believe it will happen. But actually, if you see, there are 2 or 3 good reasons why government could seriously consider this. Number one is, as we know, the taxation at the shareholders level for shareholders who matter earning more than 10 lakhs of dividend income has already been introduced. So this other, earlier bogey that, oh, shareholders get away, what happens, can you track them, etc., is gone away. Secondly, the reality is that, and as Pratibha rightly pointed out, that the effective corporate tax rate, if you count the dividend distribution tax for a profitable company distributing most of its distributable surplus, goes up to 46%. That's the math. And at 46%, the statistics are very clear. We unfortunately become the largest, sort of taxpayer country in that sense. So I think there is a lot going for removing the DDT without, again, I would say, a substantial reduction in the overall revenues for the government. The incidence shifts from corporates to the individual shareholders who can pay that tax. It has already shifted, by the way, as I pointed out. And you can always have a threshold like we had earlier in ATL for small shareholders to be exempt. And last point, I would just like to point out that from a double tax avoidance treaty perspective, it's much easier for foreign investors to get the credit of a withholding tax under the treaty rather than a complicated dividend distribution tax. And of course, last point is we happen to be the only significant country continuing with the DDT at the corporate level. So I think logically all points.
Will 2018 be the year when the axe falls on the dividend distribution tax is the big question. Our poll seems to suggest that it's likely to be status quo, but you never know. Mr. Garg, let me ask you now about another issue that keeps coming back every budget, and that is to do with the minimum alternate tax. Status quo again, 36% in the poll say that the budget is unlikely to replace the MAT with a lower alternate minimum tax. Do you agree with the poll, or do you have a different point of view?
The poll is there. But my view is that, if government really reduce the rate, if they don't want to get away with MAT, it can help, the industry. And I come from an IT industry, it will be very helpful because we are in SEZ. And most of the benefits will flow after sunset period for us. So it makes more sense that if government reduces the rate, it gives more disposable, funds at for the investment for the corporates.
Is that your bet as well, Pratibha?
Actually, I have a very divergent view. While that is my bet, but I think the government can reduce the MAT, but use it to divert it back into businesses. Tell them that they need to invest back into expanding capacities, production, which in turn will provide impetus for growth. And companies that don't opt for that route then pay MAT. So I think that would be a better way of also addressing the need for the industry to show growth and propel growth.
Yeah, that could be a way to incentivize growth, Mr. Kapadia. Is that likely to be something that you believe they might want to take forward?
I think, Shireen, that's a great point Pratibha made. And just to add to that, just to remind ourselves that the government did start in a way by prescribing a 25% rate without deductions for new manufacturing companies. So there are 2 points here. One is we still have services contributing so much to the economy. Why not give that option to services companies as well? It's an option. And number two is, again, going back to my previous point, is based on conversations with so many companies. Companies don't mind, even existing companies, giving up deductions in lieu of a 25%. So an optional 25%, I think, would be a great move.
An optional 25% will be a great move. And, it's also interesting that you, both Pratibha and you talked about, and Mr. Garg talked about the need to incentivize growth, not just for the manufacturing side, but also specifically for the services sector, Mr. Kapadia. And this was an interesting conversation that I was just having with Mohandas Pai as well. I mean, we keep talking about the need for jobs, and again, this budget is being seen in the context of being pro-growth and pro-jobs. So incentivization of the services sector, do you believe that we are perhaps going to see more on that?
No, I mean, my take is, my personal view is that I don't think in today's context with whatever is happening around the world, especially in technology, we need to really distinguish so much between services and manufacturing. We all know there are statistics that service industry also creates many, many jobs directly and indirectly. Manufacturing should be encouraged without a doubt. But there is no need to discourage services, is the point. So I think ideally, any move on the taxation front should extend to the entire economy rather than restricting it to one or the other. That is my view.
Okay, let me ask you about the other big balloon that has been floated for the last 2 years every time the budget comes around. Do you expect any change in the long-term capital gains tax on equity transactions subject to the STT? Now, we had a meeting with the Prime Minister and top economists, non-government economists, and one of the economists who was part of that meeting, Mr. Govinda Rao, the former PMEAC member, came out and said, well, a 7-member group within that 40-odd economist group that met with the Prime Minister suggested that, yes, there should be long-term capital gains tax. So, Mr. Kapadia, do you believe Budget 2018 is going to be the budget that will finally take this forward?
I think probably there are 2 or 3 angles here. One is, just to keep the record straight, there are many countries who actually consciously do not tax foreign investors on their capital gains in the host country. Now, we can debate about why that policy is there, but it is there. That's again a competitive part of attracting foreign investments in securities in the country. Are we ready to pull the plug and say, the countries don't do it, but there is so much money to be made in India that despite, let's say, a 5% tax, foreign investments will continue. Now, that's a leap of faith if the government is willing to take at this stage. Sure, you can have that tax. And then have it obviously on domestic investors as well. I think the larger point, Shireen, is that when the government does the math around the budget, I mean, you rightly mentioned, what's the kind of fiscal deficit we are willing to live up with? Because that is where the elbow room has to come in. 2-3 years ago, the estimates we saw, long-term capital gains exemption is, a saving of 29,000 crores. Good money, but given the size of our budget, is it really going to move the needle? I doubt.
Okay. Pratibha, before we talk about what the budget may or may not do as far as the fiscal deficit is concerned, and before we shift to personal income tax, let me ask you about what would be your top 2 requests to the Finance Minister?
One, as I mentioned earlier, would be to bring down the corporate tax rate. The other, I would say, is actually I would club to is around POEM, implementation of POEM. The rules have just come out. We're still grappling with GST implementation. So if that could be moved, its applicability could be moved to 1st of April 2018. And the other related to it is the relevance of ICDS. Given again that there's just so much of complexity around, do we really require that?
Yes. The nightmare for the CFO, as we've often heard that being described as. Mr. Garg, again, top 2 requests from the Finance Minister before we take a break.
So one, of course, is, reduction of the tax rate to 25% would be very effective for the companies. And coming from IT industry, I would prefer that, MAT goes away for SEZ zones for us. it would be really helpful for us.
Well, that buzz comes back every budget.
Shireen, I have one more request on extending R&D benefit to services industry. You know, unfortunately, telecom is called services and classified, but there's a huge investment that we do which has long gestation period.
Absolutely.
And we would appreciate if the same benefits and to look at really ease of implementation. Today, our tax laws are so complex that they take away the efficiency of implementation. If we can really, relook and simplify our tax laws, that would really help drive productivity in this country.
I think that is the top ask across industries. But on that note, we are going to take a break. When we return, we'll talk about what the budget may or may not do on personal income tax, and we'll also talk about the macro story. Come back to us. You're watching India Inc.'s Budget Wish List. This is a comprehensive survey done by EY and CNBC TV18 ahead of the budget. Welcome back. You're watching our special show on Budget 2018, where we take a look at India Inc.'s key expectations from the Finance Minister. Still with me, Pratibha Advani, CFO of Tata Communications, Amit Kumar Garg, CFO of NIIT Technologies, and Sudhir Kapadia, National Tax Leader at EY India. Mr. Kapadia, let's talk about what the poll suggests on the personal tax front. A revision in the threshold limits for personal tax. A whopping almost 70% believe, yes, this is going to be the budget where we will see a revision in the threshold limits. And the second question, will the Finance Minister bring standard deduction back and do away with multiple deductions? Again, about 60% believe that, yes, he will bring standard deduction back. Again, this was something that was anticipated last time around as well. On both these counts, what's your take?
So my personal view, Shireen, is that standard deduction is more likely on two counts. One is it simplifies the law further and encourages more individual taxpayers to comply. I think on the first one, last year, if you remember, we debated before the budget, and one felt that a lower rate, let's say the 5% rate, which we talked about before the budget, if you recollect, was more likely than increasing the threshold limit, because, you want more taxpayers to comply and increase at least the taxable base in the country. So personally, if you ask me, rather than increase the threshold, standard deduction is where the government is likely to go. And let's not forget that whether you look at advanced taxes, whether you look at the cumulative taxes collected under the personal tax head, the government has collected tremendously more than what the GDP growth would suggest. Of course, there is demonetization, there are other, there is GST, which is responsible. But the simpler they make the personal tax front, I think that would be a huge upside from a collection point of view for the government.
Okay, so make it simpler, standard deduction. You believe that that is likely to make a return in Budget 2018. At least that's what we seem to be picking up at this point in time. Mr. Kapadia, very quickly, and again, this was something that has been talked about in the last 2 years as well. Estate tax or estate duty, do you believe that that could be the big sort of disruptive anti-rich idea that this budget could take forward?
See, for it to be truly rich, if you like, one has to then get into the base, the market value of real estate, of gold, and of shares. Will any government of the day go down that path is a big question. For it to be really meaningful and to collect revenues as well as really make a substantive point. Otherwise, you are playing lip service. History has shown that we have collected very negligible amounts on inheritance taxes. And therefore, I think it doesn't seem to make fiscal sense, at least. But whether it will be introduced from a political grandstanding point, one can't say.
Okay, since we're talking about this being the election budget, this is going to be the last budget. The next one is likely to be a vote on account. Pratibha, what do you believe is likely to be the focus areas? There's a lot of talk around agri, infrastructure, and so on and so forth. But specifically, what is it that you would watch out for?
I think the government would focus on agri and infra. Agri is essential. You have to boost rural demand, and they require the necessary SOPs. And infra is where it's going to create employment opportunities. And that is also something that the government has been talking about. So I think both of these will be their focus areas.
Okay. Mr. Garg, what is it that you would expect?
I think so agriculture would be there, given that it's an election year. plus that's one area where government need to really work with the farmers. There has been a need to increase the farm capital. Infrastructure, because country, there's a huge opportunity there, and construction goes in hand in hand.
That's been their stated objective anyway, so we've just seen a big sort of...
Government has a desire to boost infrastructure. They have been allocating funds there. It's been seen in the last budget also. So my take is that will really help them the boost.
Okay, Mr. Kapadia, you know, since this is going to be, in that sense, also viewed as an election budget, we asked whether any government program will be announced that will ensure a basic minimum income. And about 49% seem to believe that no, there is going to be no such announcement. 31% believe that it will be limited to farmers. Your own take, sir?
There I would agree. I think I don't think the government will have the fiscal space to, you know, drop money from the helicopter, if you like, which is what this is supposed to be, and therefore a more targeted.
They could have if they didn't believe it was going to become their problem. They're very confident that they're coming back in 2019. So you know, it's not going to be somebody else's problem. It'll be their problem.
That's the good news. That's the good news that from both perspectives, that it will be not somebody else's problem. I think that's good news. And therefore, I think the government will be much more responsible from a fiscal standpoint.
So since we're talking about the fiscal space, the target for next year, according to the budget, is 3%. The poll seems to suggest that people are expecting it to go to 3.2%. Is that what you're factoring in as well, Mr. Kapadia? The fiscal deficit?
I think so. I think, and if you remember, Shireen, that leeway has been given by the expert committee, which has been adopted by the government.
Not yet, not adopted yet. The recommendations of the NK Singh committee haven't been adopted yet.
That's true.
Okay, sorry. So, but I think it has not been rejected to my knowledge. Nobody has said that this is not acceptable. So I think it's tacit nod in that sense. But anyway, that's not the point. I think the point is, given the volatility, which is sometimes beyond the control of a government, in principle, to have that kind of leeway, I think any government of the day would like that leeway. Coming to your point, you know, I personally think that if the allocations really go towards capital investments in the sectors we talked about earlier in this discussion, I personally think a 3.2 versus a 3, I think the government should be given that leeway, we should support that kind of a move, as long as it goes in building capital assets in those sectors. I think that would be good for the economy. And I think it will also help the fisc in the medium term.
We're out of time. In 30 seconds, Pratibha Advani, we've talked about what the finance minister should do. What is the one thing that you hope he will not do in the budget?
Increase the personal tax rate.
that seems highly unlikely. Sudhir Kapadia, what is the one thing that you hope the finance minister will not do?
No, frankly, you know, one would not like a status quo. You know, I think there should be some shake-up. As you said, this is the last year. It would be good to get some excitement in some of these areas which
good excitement, hopefully. Good excitement, sir.
Right.
All right. We will have to leave it there. Totally out of time. But many thanks to Sudhir Kapadia, Pratibha Advani and Mr. Garg for joining us here to take us through the findings of the EY CNBC TV18 pre-budget poll. We'll know on the 1st of February which way the finance minister decides to place his vote. From all of us here for now, many thanks for watching.